Good morning. This is Amit of UBS's economics team. Money markets appear to be thawing. Interbank lending rates have eased across a range of currencies, including the dollar and the euro. Now, although comforting, it is important to note that even after this narrowing, spreads still remain well in excess of the historical average, and also that there is little, if no, trading happening beyond the shortest maturity. The ECB fully recognizes the logjam afflicting the markets, so for the second week running, this central bank will provide liquidity at a fixed rate. Usually, the ECB provides liquidity through an auction process each Tuesday, and typically, the interest rate that is set is not far from the official policy rate. A couple of weeks back, that rate shot up to an uncomfortably high level, and the ECB responded by changing the rules to make it easier and cheaper for central banks to access make it easier for banks to access central bank funds. The ECB continues to believe that the dislocation persists, and it has therefore decided again to provide unlimited liquidity at a fixed rate today. New and second-hand booksellers are reported to have sold out of books authored by one Mr. Keynes. His prescription for spending out of a recession has gained immense popularity across the political spectrum as policymakers globally continue to throw everything at it. Fed Chairman Bernanke made the case for another round of government spending yesterday. The French and German governments are also reported to have considered support for various projects in the auto, rail, and construction sectors. On a slightly different note, the French government also announced that it will inject 10.5 billion euros into its 6 banks yesterday. And here in the UK, the government plans to bring forward major building projects, according to reports over the weekend. Turning to what is a very light data calendar today, there is nothing of note in the US or for that matter in the euro area. In the UK, we get the October print of the CBI Industrial Trends Survey. According to this survey, industrial orders fell at their fastest pace for more than 2 years in September, and consensus expects that downturn to have accelerated. The survey, along with others, including the PMI, suggests that there is more weakness to come. Domestic orders have been shrinking together with exports, and this is in spite of a weaker currency. Sterling has depreciated by around 15% on a trade-weighted basis since the peak mid-last year, and in our view, it is set to depreciate further. Recall that the UK continues to run a trade deficit, and in order to shake that off, it either needs to squeeze imports or it needs to expand exports. Now, raising export volumes just when the global economy is slipping into recession is difficult, and perhaps the least painful solution is for the currency to depreciate. On our forecast, sterling depreciates to 1.55 against the dollar and to 0.84 against the euro by end 2009. Other than that, markets will pay close attention to a speech by Bank of England Governor Mervyn King this evening. The speech will be watched keenly by the markets for hints ahead of the November MPC meeting. The overnight swaps markets have fully priced in a 25 basis points rate cut and a 50% chance of a 50 basis point rate cut at that meeting. Elsewhere, ECB member González Páramo and Minneapolis Fed President Stern speak. Recent rhetoric from the ECB has shifted away from inflation risk, and the emphasis is now on GDP growth worries and on regulation. We expect more of the same. That is all for today. Have a nice day.